Hey, Snacks here. I'm going to go through a presentation with you here, and in my opinion, this might be the most important of all the videos I do make for this course. Today, we're going to talk about how to build your risk profile. And this is not just another lesson, this is everything. Okay. If you don't take this seriously, the market will take your money. I implore you to internalize what I talk about here today. I'm going to ask you at the end to create your own risk profile, and anyone who is interested in continuing to work with me, I'm going to demand that you submit that to me before we go any further. Okay, I cannot help you if you do not take managing risk seriously. It should be your first concern, and we can teach you setups and entry models after you understand the importance of managing your capital and your risk properly. So your risk profile is your lifeline. Without it, you're just chasing highs, you're gambling and hoping. And that's not what we do here. I won't let anyone under my wing who doesn't have this locked in, because if you blow up, you won't just lose money. Okay, you'll lose your confidence and your clarity and your ability to stick to a strategy, even if it is a great one, which I've shown you here with my win rate and account gain. This is a great strategy when executed properly. Okay, when risk is managed properly, this strategy can and will change your life. So, first up, if you have not proven yourself to be able to outperform the market, then you have no business risking more than 2% per trade and 10% of your total account at any one time. Okay, that is a combination of all positions. So that's a hard number. All right. If you have not shown through collected data that you have a strategy or an edge that will outperform the market, do not put more than 10% of your portfolio in total at risk at any time. So, the psychology of blowups, you've got to stay in the game long enough to let the math work. All right. If you know your data, you can trade confidently. Look, I've been there. I've blown a few accounts up, right? Especially early in my career. And I let losers go too far. I averaged into things I shouldn't have, or averaged down on things I shouldn't have. I convinced myself that I had some foresight on a move that was very clearly showing me it wasn't time to happen. And, just thinking this trade will turn around, and just poor risk management. All right. Letting things go beyond my allotted risk, and again, averaging into them, or just getting stuck holding a bag. It's the worst. You literally remove your ability to deploy capital because it's sitting in these shitty positions that you just didn't follow your risk plan. And it cost me years of chopping myself up and switching strategies and thinking I haven't found a perfect system, when in all reality, I had an edge very early in my trading career, but I didn't respect or manage risk properly. And if you don't manage risk, you won't survive long enough to let the math work. Okay. You've got to stay in the game long enough to let the math work. Knowing my data and having a strict exposure model allows me to eliminate fear from my decision making. I don't have a fear of not executing. I don't have a fear of market volatility. My data has allowed me to shift from hesitation to an execution mindset. Okay. It's if this, then that. If my model aligns, if I see my trigger and my risk profile aligns with the new position, I press buy. It's because I have the data showing me that doing this over time stacks up into an edge. The worst thing a new trader, or any trader for that matter, can do is oversize and take themselves out of the game. And it's very easy to do, but also very easy to combat. And you size properly. All right. That is how you stay in the game. Decide the amount of capital that you're willing to risk, break it into 10 pieces, and each trade is 1/10 of your account. If you have a larger account, then I recommend cutting this in half or speaking with me and we can evaluate your situation. But, and larger, I mean mid six figures. Less than that, then you're likely still in accumulation phase. And I like the math of breaking your portfolio into 10 different units or positions. Okay. And that is your unit size. Your total exposure should never exceed 5 or 6 positions on at once. That's it. Okay. Because anything can happen. We don't have a crystal ball, right? You could go to sleep, wake up, and a war started. And if you're overexposed, you're going to take a hit that might wipe out months of work, or might take you out of the game, might get in your psyche, might mess with your head and think, oh, I've lost all this money. This edge doesn't work. I need to look for something else. Or even worse, I can't do this. Well, you combat the possibilities of these things happening by managing your risk properly and never being overexposed. Okay. So we're not here to make one lucky trade. We're here to grow consistently. You also need to learn to read the environment. All right. I use a simple ABCDE system that allows me to put a marker on the current risk profile of the market. I might put on max risk. Okay. That's on the table. I may enter up to 5 or 6 positions and go into full risk mode. And as long as the market remains clean and the breadth is strong and a few other things may align, then I'm willing to go full port, as I would say. You never go full port, but my max full port is 50, 60% exposure at any one time. All right. And I'm tripling my account this year with these rules. You do not need to max out to make money. You need an edge and you need to execute it consistently. A B risk environment, maybe I'll take half size or be far more selective in the ones that I do. If I would still like to put on a full unit risk size for a trade, I'll just be more selective and, maybe just enter 1 or 2 or 3, something like that. I won't go all the way up to 5 or 6 positions. The other environment is C, D, and E, but in C, I'm very defensive posture, right? I'm mostly managing trades that I'm already in or looking for something under the hood in the macro environment to maybe give a hint of a shifting structure back towards B. And then maybe we can do some positioning and have ourselves ready for that positive sentiment shift or that positive market shift back into a higher rated environment. D&E, I'm either moving into cash or I am just sitting on my hands and watching, right? Watching the macro levels and staying patient. And by deploying this system, I'm protected, all right? I'm protected, and this sort of system will protect you too. So we've broken our trades down into singular units, right? And we never go above 60% exposed. And then we make sure we're using the macro environment, we're reading the macro environment to allow us to scale in and out of our risk tolerance, right? Higher risk tolerance, market A. Little cautious B, C, super cautious, D and E, maybe stay out of the market, or possibly we're looking to roll into a longer term bear market where everything would then change. This isn't a playground, all right? It's a battlefield run by professionals that will take your money. If you think you're going to step into the market against the wealthiest, smartest, and most ruthless money managers on the planet and wing it, then you're wildly misunderstanding their ability and their desire to take every dime you have exposed. So track it or blow it. You need a journal. You need to track every trade. Track what your exposure was, what your risk environment was, what setup you used, where you entered, where your stop was, where your target was, where was your mind when you entered? How do you feel about the trade you executed? Okay, because we don't always get our exact levels, but you need to detail why it changed if it did. All right. It's great if you set up a trade and you exactly hit your profit target and you were never in drawdown on the trade. I mean, sure, there's not a whole lot you have to write up besides great trade. But a lot of times there's some nuance that you need to track, you need to log. You do this for every trade. Okay. Data is your edge. Data is your edge. A couple tools we have here, just pen and pad is fine. I would suggest getting some of the charts printed out. If you're going to go with a more manual entry model, then get some charts printed out so it's not just words and you can actually see some of the executions visually next to your words and your thoughts. Another is annotate on your chart in TradingView or whatever your charting platform is. Surely there's a text tool that you can move over and you can write right in there on top of the chart and you can use it to set your levels. And then traderview.com has a free version that I think it's like 30 trades a month. It'll allow you to do for free. And that should be plenty, especially for anyone first getting into this. That should be plenty for you. Okay. So I don't care what you pick, but pick something and journal. It's non-negotiable. So trust the math and stick to the rules. Once you've built your edge, it's no longer about strategy. It's about discipline. Okay. Can you manage risk long enough to let your edge play out? And if you can, this gets predictable. It gets profitable. Can you actually start modeling and breaking this down in your journal? Can you start visualizing what the future would look like if you were to risk $500 per trade with a 65% win rate and a 2R target and 3 trades per month? What does my account look like in 6 months? What does it look like in a year? When have I reached a risk level where my position size can increase, compounding gains? Okay, that's how traders win. And that's how I'm up 150% this year and well on track to triple my account, right? This is broken down. It's math. Okay. If you're serious about this, and I really mean serious, this isn't optional. I require anyone who wants to trade with me or learn under me to submit their risk profile. If you don't know your unit size, if you don't know your risk environment, if you don't know how to track the market environment, don't have a journal, I can't work with you, right? There's nothing I can do because the market will punish the reckless without mercy. If you do not take risk management and put it at the front of your strategy, then there's just not a whole lot that I can do to help you. Because at some point, the odds of someone who doesn't track and doesn't have a broken out risk strategy, the odds of you blowing up are infinitely higher than someone who understands why they've done each thing that they have. And those are the kind of people I'd like to work with. Know the math and realize gains. Take 10 minutes. Get honest with yourself. If you're going to ask for my time, get honest with me. Build a risk profile. Know your size, know your limits, and know the plan. Okay, we're not here to gamble. We're here to outperform the market. So if you're serious and you would like me to help you, then please build this risk profile, as I've said, and just look at your own finance, decide a number that you're willing to risk. Okay. Of course, we're never going to allow you to risk all of that number, but decide a number that you're willing to put into the market, right? And try to compound into significant gains, into meaningful growth of your portfolio. If you don't want to be public, then just email me here and at warrensnacks@gmail.com. And, I'll keep everything private. It'll stay between you and I. I am obviously, I don't care about where your finances are. I care about teaching you how to manage risk and breaking down your own personal risk profile so that you can apply everything that I'm also teaching you into realizing meaningful gains. All right. Without a risk profile, you're shooting in the dark. And that's just not how we do things here. All right. So I appreciate your time and I look forward to seeing you guys' profiles.